Good morning, everyone, and welcome to our webinar today, An Investor's View on How COVID-19 is Changing Online Travel Planning and Purchase. This week, we welcome our special guest, Lloyd Walmsley, Managing Director and Senior Internet Research Analyst at Deutsche Bank Securities, for a conversation with David Morrow, Vice President Global Marketing at ADARA. We will begin our webinar with the latest insights and data from the Traveler Trend Tracker shared by Carolyn Corda, Chief Marketing Officer at ADARA. For those of you who are joining us for the first time, Carolyn Corda is an industry leader in customer data and predictive intelligence. As the Chief Marketing Officer of ADARA, she's responsible for aligning the brand with the company's expanding mission and growth goals. Prior to ADARA, she was a managing director at Accenture, where she led the applied intelligence practice for the travel sector. Before that role, Carolyn was a senior executive at Epsilon with responsibility for developing and launching new data solutions. With that, I'll hand it over to Carolyn to begin our webinar today.
Thank you, Niharika, and welcome all. We'll start with a few notes on our COVID Resource Center, then we'll dive into some of our latest trends. First, a reminder, all the slides you're seeing will be sent out after the webinar. Now, for those who aren't familiar with ADARA, you might wonder where the data I'm presenting today comes from. We have over 270 consumer brands that share their data with us, including some United, Marriott, Singapore Airlines, and Travelport. As a result, we have a lot of data. Typically, we see over 14 billion searches a year and almost 1 billion air and hotel bookings. We're able to get fairly granular on transaction behavior, as most of our 1 billion profiles have on average 30 data points per profile. We've made a lot of our trend data available on our website. It's organized by region, US, EMEA, and APAC. You'll see the URL here so you can access the data yourself. We do update it daily, so check back often for the latest. The insights you're seeing today have been developed by ADARA's brilliant analytics team. Of course, you're welcome to reach out to them if you're interested in custom reports and insights. You'll find it easy with the purple request button. Also, if you do have questions, please go ahead and put them into the chat box. If I don't get to them during the presentation, we'll respond afterwards. As we go through the slides today, I encourage you to think about the findings on 2 levels. 1, what are the implications for your business today? And 2, how do the findings change your view of the overall pace of recovery? For the last slide, I'll be offering my scorecard for how the industry is tracking toward recovery. Now let's take a high-level view of consumer demand over the past couple of months. On this slide, we're focused on the volume of domestic air bookings for the US compared to the same period last year. We'll turn to hotels in a moment. All these columns reflect a decrease in percentage volume, so they're all in the negative compared to last year, below the 0% line at the top. Business air bookings are the pink column, leisure air bookings are in purple. We'll be focusing on the 3 pairs of columns on the right of the chart, shaded in light pink. The bottom of the COVID downturn was the last 2 weeks of April, from the 16th through the 30th. Business bookings were down to 95% of the previous year, 82% down for leisure bookings, before beginning to rise back up in May. Bookings have continued their slow climb, gaining ground over the past 6 weeks and posting an average year-over-year decline, an improvement from before, but still down year-over-year, 85% for business, 65% for leisure. The table on the right highlights the rate of change for both business and leisure. You can compare the rate of recovery and see that the rate of increase for leisure at 6% for May 1 to May 15, what we're calling the early recovery, and 16% for 16 May to 24 June, is more than double the rate of improvement for business. We'd expected leisure to bounce back faster than business, and this data confirms that assumption. This is the same analysis for hotels comparing 2020 to 2019. During the deepest drop during the last half of April, hotel bookings settled at -81 and -69.8%. Since May, hotel bookings have continued to increase. Comparing the volume of bookings from the last 6 weeks, the last pair of columns on the right, you see that business hotel bookings have gained, but are still down on a year-over-year basis, 60.8%, while leisure hotel bookings are down 39.8%. Again, an increase compared to earlier in 2020, but still down from 2019. The rate of change table shows business bookings are beginning to catch up with leisure bookings. They're improving at half the rate, 5% versus 11% in the early recovery period, and now they're accelerating a little bit faster at almost 2/3 the rate of leisure, 21% versus 36%. Our clients have been very interested in what we're seeing with booking horizons. How much in advance are travelers booking before they take their trip? Are they booking at the last minute, or are they making plans far in advance? We focused on leisure and found that if we compare current booking proportions in the pre-COVID period, the first 2.5 months of the year, the people are now booking closer to the trip departure date. There's been a significant shift to more close-in or last-minute bookings, which are 30 days or less, while bookings for trips taking place 61 days or more out have declined. For leisure air, it's a 10% shift. For hotels, it's the same pattern, just a little bit less pronounced, with an additional 7% of booking volume in the short horizon, while the 61+ day horizon loses 6%. The interpretation is that this represents consumers that are eager to travel for a vacation this summer. This dynamic also has implications for the timing of marketing campaigns, and it represents an opportunity to engage people that are making more spontaneous plans. Now let's turn our focus to the upcoming 4th of July holiday. We saw a couple of weeks ago the most popular destinations are those that tend to be high density: Miami, Las Vegas, and Orlando. In this chart, you see in the left-hand column the top destinations in order of air booking volume. Hotel bookings are in the right-hand column. Alongside each destination is a year-over-year percentage change compared to the same booking period in 2019, which is May 1st to June 24th, just yesterday. I've color-coded Miami, Denver, Los Angeles, Las Vegas, and Orlando to highlight the consistency between flight destinations and hotel booking destinations. You'll see that the air destinations are all still in negative territory on a year-over-year basis. For hotels, I've bolded the percentages that are now positive compared to 2019. If you're wondering whether the recent negative press around COVID infection rates in Florida drove any cancellations, we did that check yesterday afternoon and determined there was no significant change in terms of rapid increase in cancellation over the past few days. It's also instructive to take a quick look at the day-by-day booking volume for a popular vacation spot like Las Vegas. That's what you see here on the chart, with hotel volumes, booking volumes in turquoise, the flight booking volume in sky blue. We've indexed this to 2019, and you see that the hotel bookings have recently shot up starting just a few days ago. We saw the same very last-minute booking phenomenon for Memorial Day holiday, and I expect we'll likely see it again for Labor Day. We expanded our analysis to examine the biggest movers. Those secondary markets posted big gains in both air and hotel booking for 4th of July. They're listed here in order of volume of bookings, and again, we've added the year-over-year percentage change. All the destinations for hotel bookings were well into positive territory. If you scan the locations, you'll notice that lower destinations, you'll see a combination of beaches like Fort Myers, as well as open spaces, places like Montana, Bozeman, and Missoula. There's been a lot of talk about the drive market, and today we're looking at it from the lens of origin markets. Our goal was to determine if there were origin markets where the people who live there were more likely to take nearcations versus fly to more distant locales. We looked at 8 different metro areas, and from those isolated 3 examples of what a primary drive-focused market looked like, what a mixed drive and fly market looked like, and what a primarily flight market looked like. Here are the results. One of the best examples of where residents are looking to primarily travel by car for 4th of July is Los Angeles. We've analyzed hotel bookings and ranked the destinations by popularity. Again, you also see the year-over-year percentage change next to each city. We've also analyzed air destinations. You see them in the lower half of the chart. At the bottom is a legend that has both the travel time from LA to the location of the hotel or the flight distance to the destination airport. Pink is short, less than a 6-hour drive or 600-mile flight. Purple's medium, and long is more than a 10-hour drive and more than a 2,000-mile flight. We assume that in most instances, when the drive time is more than 10 hours, that's in blue. If you'll just back up one slide, please. If it's more than blue, then the vacationers likely took a flight. So as we look at where people in LA are going for the 4th of July, the first thing you notice is that the top 5 destinations are all within a 6-hour drive. The next 2 are within a 10-hour drive, and Salt Lake City is more than 10 hours away. The air destinations are a mix of medium and long hauls in purple and blue, with one short haul to Las Vegas. So some of that, hotel bookings that we see in the top of the chart for Las Vegas are at the very top level are likely not going to be, some folks, not everybody will be driving there, many will be flying. Now, a good example of where the people that live there are both driving and flying is Houston. The top 3 destinations for hotel bookings are within 6 hours. Below that, we've got a mix of destinations where people are likely flying. You'll see I bolded Denver, Miami, and Las Vegas, which in the air destinations, which correspond to the hotel bookings. Given that Houston is centrally located in the U.S., all the flight destinations are coded purple for medium haul. So where are the people that are planning to fly for their holiday destination for the 4th? They're in San Francisco. For the hotels that the people of San Francisco booked, only one destination is a short haul drive. That's in their hometown area. Next are Las Vegas and Los Angeles, both under a 10-hour drive. But you can see from the table below where the air bookings are, those 2 destinations are also in high demand for flights. The next 5 hotel destinations are all more than 10 hours away, and most of them beyond that require a long haul flight. If you look across the 3 origin markets, scanning the top hotel chart for pink, you get a feel for how different origin markets, even those in the same state, under the same restrictions, can be in terms of approaching travel and where they're going to be going. For the rest of the summer, here are the top destinations based on air bookings and hotel bookings. They're listed in order of booking volume with a year-over-year percentage next to each destination. Miami, Las Vegas, Honolulu, and Los Angeles are all consistent high demand destinations. And I think it's interesting to see Honolulu. We didn't see any changes. Again, we checked for cancellations in terms of some of their recent changes on restrictions, and it continues to be a place that people are planning that long haul flight to. We've created a scorecard based on the results we've just seen. Going row by row, the first 2 slides that you saw showed sustained improvement in booking volume, which I've rated as positive. I put a pink shading there underneath the positive column. However, business is lagging leisure, which is what we expected, but it's a pretty big gap. Also, air continues to be significantly lower than hotel, and you'd expect those 2 verticals to equalize on a year-over-year basis. So both of those are rated in the negative column. The shift towards more spontaneous bookings, the high destinations, that last-minute surge we saw for Las Vegas, and the lack of decline in cancellations, we're still seeing strong surge for Florida. We didn't see strong or a big bump in cancellations. Those are all positive signs. The mix of the fly and drive market, I'd say that's balanced, so that's neutral. And finally, the continued predominance of destinations like Honolulu for the rest of the summer is a positive. It suggests consumer comfort and consumer willingness to take long flights. Now, a couple of caveats as we think about the scorecard. This is only addressing consumer demand, willingness to travel. We're not addressing the pricing element, that part of the equation. And it's clear that deals are driving some of this demand. Also, it's clear that the industry is continuing to struggle to adapt to lower demand levels as layoffs and other seismic shifts continue to take place. So in this case, we're just focusing on what we see about consumer willingness to travel. So taking that all into account, overall, I'd take this current situation we're in, I'd rate this as somewhat optimistic. Not terrific, but heading in the right direction. Think about how this compares with your own assessment. Consider what consumer behaviors are your markers for recovery and how you're tracking against your assumptions of the pace of recovery. With that, David, over to you.